Greetings, Dwayne, CFRN. I'm going to take a look at a couple of trades, some of the alerts, some of the one trade a days. We're going to start out here with the free trade that was issued on Sunday night, 7:45 p.m. Eastern. Okay, right here. Okay, we get our first trigger. Here, I'm using a 5-minute chart. In fact, can I stand by and I think I can enlarge the screen. I guess not now that we're rolling, as they say in the biz. But here I can show you, watch. If I go from candle to candle, look at the time. That candle, 9:40, 9:45, 9:50, 9:55, 10. In the live trading room, we typically use a 4-tick range chart. Not to be confused with a 4-tick chart. A range chart is simply a chart where every candle is the exact same height. There wouldn't be a big candle followed by a small candle and a medium-sized candle and another tiny candle. All identical. I'll show you. I can turn this into a 4-tick range. That skews everything out, but let me back it up. Gotta get back. There we are. Okay. So, on the 4-tick range, we use the 4-tick range for a number of reasons. Part of it is symmetry. Part of it is so that we know where the next candle is going to open. It's part of our strategy. Okay. Now, right here is, well, because I took it off of the, it was on November the 22nd. November 22nd. At 7:45, which is 19:45. And because these are range candles, see, there's no time involved. So anyway, back to why I'm using a 5-minute chart. Because many of you may not be familiar with the range chart, but everybody pretty much understands the 5-minute chart. So let's go find the trade again. Okay, this is when it went out, Sunday night, 7:45, 1940. It's 1950. 1940, 50. Now, why is it? I set it on 5 minutes, not 10. Let's try that again. 5 minutes. Should have left it alone, right? All right, let's back up and try again. Are we getting 5-minute candles? Yes. 50, 55, 60, 2100, 5, 10, 15, 20. Okay, super. Okay. Now, one of the most important things about trading is you have to learn how to trade. Now, everyone just stood up and saluted Captain Obvious with that statement, right? Of course you do. All right. 1930. I got a trick candle here. 20, 25, 30, 40, 50, 15, 20, 25. There's a little glitch in there. Oh well. It's a 5-minute chart. Enough already. Okay. So, here's the first trigger. Now, the trade said simply, consider being long 30-year bonds. Now, we have rolled since this Sunday night free trade, we've rolled forward into March bonds. So, instead of ZBH, or instead of ZBZ, which is what we're in here, we're now in ZBH. Okay? All right. So, long above 154.22 or short below 153.20. Now, even though I'm looking for bonds to go higher, I've been wrong. So once I do my math, do my calculations, do the magic, I spin my ball cap around, brim pointing the other way, do the same math, same calculations in the opposite direction, so that if, in fact, my bias is incorrect, gosh forbid, you still have a good trade, right? See, if I was convinced bonds were going higher, but they didn't, you'd still have a decent trade. That's the idea. That's the concept. So, turns out they did actually go higher from 154.22, scooted all the way up to a swing high of 155.24. Now, 154.23 to 155.23. That's exactly $1,000. There's 32 ticks to a point. Bonds can be a little confusing if you've never traded them before. They pay $31.25 per tick, 32 ticks to a point. And so a 1 point move would be 154.23 up to 155.23. Okay, so let's say you're using a 5-minute chart. You have to, our partners, if they are going through our 90-day mentoring program, write a business plan, write a trading plan, and they establish a $100 per day daily goal, okay? Once they reach their $100 per contract daily goal, they put away the mouse. They're done for the day. Now, I realize that we have a lot of experienced traders who are coming in to trade the Concierge trade alerts and to trade the one trade a day trades, who don't have the background and the training that our students do. So that's part of why I'm making this video, to kind of help you. I mean, the best thing you could do is become a partner and go through the 90-day mentoring program. You would have access to the 2420 blueprint, which is designed to take you from one contract to 20 contracts over a period of 24 months. So I know $100 a day is not a lot to get excited about up front, but by the time you wind your way through 24 months and slowly, methodically increase your contract size, always by one. Now, before you can leave the simulator, you have to be consistently profitable 10 days in a row. You have to make $100 in 10 trades or less, 10 days in a row. That's when the blueprint will green light you to go live. Once you go live with one contract, we want you to increase your account balance by $2,000, okay, before you add a second contract. After that, we use a calendar-based method to add contracts at a predetermined rate. All very methodical, and our risk management is very aggressive, more aggressive than probably most folks are accustomed to. So I'm showing you this on a 5-minute chart for the benefit of someone who perhaps does not have the benefit of our trading. So on this 5-minute chart, 154.22, it says long above 154.22. That's why I have this line at 23, because if we're going to get long above 22, that's going to be at 23. Okay? All right. This first move up takes us to 154.28. Okay? So from 23 to 28, that's a 5-point move. At 31.25 per tick, that's a little over $150. So whereas one of our students would be done for the day, those who are using larger stops and looking for larger targets are going to trade this a little bit differently. And let me give you an idea of what differently looks like. Your initial stop is going to be here. You got this little double bottom going on. Okay. Now, if you're trading multiple contracts, you may take something here, you may not. I'm of the belief, even if you're an experienced trader, even if you're trading multiple contracts, as the market pays you, pay yourself. So the market makes $150 per contract available here. If you're a 10-contract trader, that's $1,500. Okay? Is there volume to support that? Oh, you better believe it. On the candle that triggered, right there. And you notice how at that price, did you notice, see that? Okay. In that 5-minute period of time, 5,644 contracts traded. So could a person slip in there with 5, 10, 20 contracts? Yeah. Now, when you're trading multiple contracts, are you going to have split fills? In other words, you'll get filled on some at one price and then get slipped a little on a couple. Yeah. That's just part of trading, and that's something you have to get accustomed to. Now, here's what price does. Price is always building legs in one direction or another. So we get a leg and a retrace, a leg, and because we put in a higher high, we understand that we have an uptrend on our hands. Okay, once this second pass is made at the trigger line, this comes here. Okay. Now price comes back to the trigger line, waltzes around a little bit, and then heads higher, substantially higher. Okay. Now we're going to get this stop just a couple ticks beneath this swing low. Okay. Whatever you're comfortable with. You want to give it 2 ticks, 3 ticks. Because if price comes back below this, the trade's done. Now at this swing high here, 155.09. We started out at 23 and we went to 32. So that would be 23 to 32. That would be 9 ticks. And we're at 155.09. So that's 18 ticks right there. Okay. So, just to give you an idea, 18 times 31.25 equals $562 per contract. Yes, that's true. If you're a 10 contract trader, that's $5,000. Okay? But now, price rarely moves in a straight line. Leg, retrace, leg. Eventually you're going to get a deeper retracement, and that's what we get here. And as we roll sideways, this is the Asian session. Bonds typically will go flat during the Asian session. As we're approaching that $1,000 per contract move, okay, what time is it? We're heading into the London Open here. You get this little move down here. At this point, I would be putting a stop here. And then after this little pullback, I would be putting a stop here. Now, you need to know the market that you're trading. What is the average swing in the market? Okay, in bonds, $1,000 per contract. That's about as good a swing as you'll typically see. We get that in this trade, okay? Now, at this point, when does your stop? If your stop remains here, where do you get taken out? Would it be here at 155.04? We've seen a high of 155.24. Okay. I would be seriously considering, after this pullback and this move up, and you see how we're failing to rally here? This thing's running out of gas. It needs a deeper retracement, okay? So we get our stop right under here. And there you go. So maybe your stop is at 155.10. Okay, the swing high was 24. Now, when you know you're stretching the rubber band, when you know you've got a $1,000 move in bonds under your belt, what do you want to do? How much of that are you willing to give back? You know, at this point, a very aggressive trader is going to be shedding contracts and more than likely working the stop up. Because if you can take $1,000 out of a bond trade, you've done a fine day's work. Okay? So that's one way of trading it. Now, again, let's go back to square one on the first trigger. Okay? Right here. All the guys in our mentoring program, if they took this trade, they'd be done for the day. We went from 23 up to 28. That's 23 to 28 is 5 ticks. 4 ticks is all we need at 31.25. That gives us $125 per contract per day. It's $25 more than we're looking for, and we have 10 trades to do it. That's how the 2420 blueprint works. So this would have been a one and done trade. On the next trigger, we get up to a high of 154.29. So this went 6 ticks. And then just kind of moseying here. Now we use a 8-tick hard stop on everything. Bonds, we actually go with a 4-tick hard stop. That's for our mentoring students. Now the swing low here is 154.21. So that's only a 2-tick drawdown. So if you rode this and did not take your profit, and you're running a four tick stop, you're stopped out here. If you take your profit here, you don't get stopped out. If you don't take your profit here, you don't get stopped out. And you're still in for the 18 tick move. Okay? We believe the answer to the trading equation is not more points, but more contracts. Here's the rub. Most people who have money in their trading account understand that, and they want to just dive in with both feet and start trading 10 contracts or 20 contracts. Again, this was a $150 move right here. Okay? This one we said was a $500 move. On 10 contracts, that's $5,000. On 20 contracts, that's $10,000. Okay? Now, if you're trading that one contract, did this thing put $1,000 on the table? Did it make it available? Yes. But you have to determine who you are as a trader. What is your daily goal? Now, some traders want to trade bell to bell. I'm on a roll, you know. We have a different philosophy. Once we reach our daily goal, we're done for the day, okay? So, when you get a free trade, think about the things I've said. In fact, on a move like this, we take our stop. We're at 8 ticks. Once we have 4 ticks profit, our goal in bonds would only be 4 ticks. We only risk 4 ticks. On a typical trade, we have an 8-tick stop and an 8-tick target or a 10-tick target. Markets that pay $12.50 per tick, like the S&P, soybeans, and the euro, you only need 8 ticks to be done for the day. Markets such as crude oil, the Russell, gold, those pay $10 per tick, so you need 10 ticks to be done for the day. Now again, I know that we have many people trading the alerts who are experienced traders. You're already trading multiple contracts. You're accustomed to using larger stops. Those of you that are just starting, I highly suggest that you look into the mentoring program, which will, over a period of time, get you to that higher ground. If you jump in with your money and start trading 10 contracts, you and your money could soon be parted, okay? Trading's risky. You can lose all of your money and then some. It's not suitable for all people. And you should consult with a licensed investment professional before making any investment decision. So, all right, this is how that free trade from Sunday night played out. As you can see, bonds have gone flat here in the December contract because we're now rolling into the March contract. We're going to be on break Thanksgiving, and Friday there will be no live trading room. There'll be no radio show on Friday. We'll be back on Monday with a full schedule, and we'll be trading bonds in the March contract, and we'll be trading gold in the February contract. So let's take a look at another trade or two. Okay, this is Crude, GCLF6. And let me show you the alert from last night. Bring it up. There we go, GCLF6. Long above 42.80, short below 42.30. It's that same mentality of I'm going to give you the trade in the direction I think it's going, but then I'm also going to give you my best entry in the opposite direction. Okay. Now I put this on the 4-tick range chart just so we can, so that you could see what some of our students see. Okay. Doesn't mean you may not want to trade that way, but that's what we teach. If you come with us, that's what you'll learn. All right, so the alert was 42.80. Let me drag that over here. Okay. So the alert goes out and it says to consider being long above 42.80. Now, if we're going to be long above 42.80, we got to push our line up to 42.81. Long above 42.80. Got it? Okay. So this first candle goes to 42.84. So from 81 to 84, that's 3 ticks. Now, we use an 8-tick hard stop, so our 8-tick hard stop is going to be down here at 42.72. Let me show you. 42.72. No, I'm sorry. We bumped it to 81 minus 8. It's going to be 42.73. That's going to be the 8-tick hard stop. Okay? So we get a 3-tick move. That's not enough to move our stop to break even. Okay? Price drops below. We trigger. We put in a swing high up at 42.85. I'm sorry, 42.87. At 42.87, now you're looking for, let's make sure we understand this, 10 ticks. We use a very aggressive risk management. So, we're looking for 10 ticks and we're done for the day. So, when the market puts 7 ticks on the table, that's 70% of our daily goal. Now, we have, if we're using the 2420 blueprint, we have 10 trades to make 10 ticks. Now you're thinking, well, wait a minute. If it takes you 10 trades to make 10 ticks, by the time you pay your commissions, well, you haven't made any money. Well, that's not true. If it takes you 10 trades to make $100 and you subtract out your commissions, depending upon the different markets that you trade and the commission rate that you pay, there'll be profit. I'll show you an example on the S&P in a minute. S&P margins with us, well, not with us because we're not brokers, but with our brokers, 580. I think with crude oil it might be 680. Okay. So anyway, let me show you. When there's 7 ticks on the table, okay, and you're looking for 10, if you've got 7 on the table, when we have 4 ticks profit, we immediately bring our stop loss to break even. Let me paint this red. Red. That's our stop. Okay. So when price moves up 4 ticks, we're going to take our stop to break even. That means we have no risk on the trade. Now, when the market puts 10 ticks on the table, or 7 ticks, I want you to lock in 3 or 4. Let's say you only lock in 3. All right. Price comes back, and as it comes back and stops you out, it gets below. Let me open this up a little bit so you can see it better. Yeah, there we go. Okay, there we go. Much better. All right. So in the first move, get 7 ticks on the table. With me? I'm sorry. We had to bump this up to 42.81. And so we get 6 ticks on the table. Okay? So we're going to lock in half of that. That's 3 ticks. We get stopped out. Price dips below the trigger because our trigger is actually 42.81. Now, this one was a pretty quick reversal, so you might not have caught that. All right. Now, this one went up to 42.89, so that's 8 ticks. How many do we need to be done for the day? We need 7. And so if this goes up 8, can we get our 7 out of that? We can. But because this was such a quick turnaround here, you might not have had time to really get on board. No problem. Another trade will come along. And it does. We get a close back below. Nope, moved the wrong one. $42.81. Okay, so we locked in 3 there, and we're just going to say we missed this one because it just happened so quick, and you know, maybe you're not that quick. Now, we do have in our DOM, and I'm sure you have on your DOM, you can automate the strategy so that you can automatically move your stop loss to break even at 4 ticks. You don't have to touch the mouse, it just happens. Then, from that point, every time price moves up a tick, you can lock in a tick. Up a tick, lock in a tick. That's why I said when you get up to 6, you can have 2 or 3 locked in. I'd rather see you have 3. You can always grab your mouse manually and slide it. Okay? Now, this is obviously the trade that's going to make your day. Okay? We trigger 42.81. We get up to 85. Our stop goes to here. We get a pullback here. 42.85. The swing high up here is 42.99. So this move makes from 42.81 up to 42.99. Would that be 18 ticks available? Okay. Now, again, our students are done for the day. They caught their 3. And here, once they have their 10 for the day, they're going to be trailing pretty tightly. And so on any one of these, they're going to get stopped out. But that's okay because they're getting stopped out with profit. And they're ending the day profitable. They've reached their daily goal. If it takes them 2 trades, that's 8 trades that they're going to roll forward into the future. And if by trailing their stop, they end up with more than $100 per contract, let's say they pick up 10. So they have 10 and 3. That's 13 ticks. So that's $130. So they're rolling forward 8 unused trades, never expire, never go bad. So when you come in tomorrow, you've got 18 trades instead of just 10. Every day you get 10 fresh new trades to work with to go make your $100. So tomorrow, if you only used 2 trades today, tomorrow you have 18. This takes the pressure off of you when you come in and sit down and you get ready to go to work. Oh my goodness, what if I get stopped out? Well, you got 18 trades to make your $100, and you'll still be on track to graduate as a 20 contract trader in 24 months. It's all in the blueprint. Okay. Now, of course, this thing goes up and puts in a high all the way at 43.16. So from 42.81 to 43.16. 316 minus 281. That's a $350 per contract move. It's 35 ticks. Okay. Again, how are you going to grab that? How are you going to trail it? Because this is a pretty deep pullback. If you've locked in your profit for the day and you get stopped out here and this continues higher, are you going to take advantage of that? Now, this happened last night. Let's go take a look at this morning. What happened today? The alerts went out last night at 8:45, 20:45 p.m. Eastern. That's when the alerts went out last night, which reminds me, I got to get the alerts out tonight. Although tomorrow's Thanksgiving, maybe there's no point. Okay, so 42.30 is our number, right? Doesn't it say that somewhere? Yeah, 42.30. So what do we got to do? We got to bump it down to 42.29. Okay. All right. And so our 8-tick hard stop, if we're putting this at 29 minus 8-tick hard stop, it's going to be 42.21. I'm sorry. I did that backwards, didn't I? 29 and 8's 37. There we go. Okay. So, price back and forth, back and forth, back and forth. And from 42.29, we get a drop to 42.22. Now that market makes 7 ticks available there. Okay. Remember, if you're trading it like we do, your stop's going to go to break even once you have 4 ticks. And then at 7, you're looking for 10. I'd like to see you have 3 locked in. And here's another one of those real quick ones, okay, where maybe you didn't have a chance to reset, but every time price goes back above the trigger, that resets the trade. It's like pinball. It's like a new ball rolling up into the chute. You get to pull the plunger again. It's a new dawn. It's a new day, etc. All right. So we're at 29. The swing low here is 25. So your stop goes to break even, and you get stopped out. Okay? At break even. So you got potentially a 7-tick move, but you're not going to get 7 ticks. You're going to lock something in. Hopefully, you'll lock in 3. I'd love to see you lock in 4, but most people aren't that comfortable being that aggressive. So if you get 3 locked in, you've done good. We're just going to consider that we missed this one, even though it was a nice trade, and it dropped 9 ticks. All right. 42.29 down to 20. Yeah, it dropped 9 ticks. But because it spent such little time above here, we'll just say, yeah, missed it. Here, because it went 4 ticks, this is why you want to use the automated feature in the DOM. Once there's 4 ticks profit, you want it to automatically take your stop to break even. Break even's good. On the next move down, this one's just what we're looking for. Okay, this is just what the doctor ordered. Swing low is 42.18. So from 29 to 18, that's an 11 tick move. Okay. Now, if on this 7 tick move, if you just locked into the 3, seven-tick move, but you locked in 3 ticks, and you caught a break even, and then you caught an 11-tick move. You only need 10 ticks for the day. Now, this was just such a beautiful move down. Okay, when this thing hits 10, I would have my stop. I'll tell you what, once it hits, because what do you need, 7? Once it hits 7, man, I'd be trailing that thing at 6, 5, well, 5. And then as it gets down here and it's printing 11, I'd be at 9. Well, gosh, man, if you're at 9, you're certainly going to get stopped out. That's exactly what I want. And see, that's what most people don't understand about aggressive risk management. I want to get stopped out. I want to get stopped out. I want to get my goal for the day. I want to be done. I don't want to stare at the screens all day. So, 7-tick move, we're able to take 3 out of 7. 11-tick move, because we manually grabbed our stop, because we know we've already made our daily goal, and no way are we giving that back. We pull it down, and so there's 9, and 3 is 12. All right? So we had 3 trades this time, because remember, one's a break even. So we picked up 3 and 9 is 12. That's 120% of our daily goal. So what that means is we're going to have 7 unused trades that we can roll forward. Plus 20% daily production. And that goes in a little kitty, and we have an app. It's called the Daily Production Tracker. Members have access to it in the members area. At the end of the day, you export from DT Pro or from NinjaTrader. You export your information into the Daily Tracker app, and it was built by one of our partners, Dan, and it will keep track of every statistic, every possible thing you can imagine. He's done a fabulous, fabulous job. And when you come in tomorrow, it will tell you. Now, remember, we said on the first day we had 8 rollover trades, and now on this day we're going to have 7 rollover trades. So on your third day at work, you've got 25 trades to make your $100 per contract per day. Okay. Now, some of you are saying, well, that's too early in the morning for me. Okay. What time you want to get up? Here's a move at 6 o'clock that goes from our trigger at 42.29 down to 42.11. Here's another trigger that goes down to 42.05. Then we come back. Important prices, important areas are almost always tested. Okay, this would be a break even. And then you'd have 2 break evens back to back. And then on the next one, from 29 down to 19, you'd have exactly 10 ticks. This one reset and led to all that. Now you're looking at this, you're going, well, dang, I'd like to get some of all that. That's what I'm talking about. I'll show you a way. Bearish cross, price pulls away, price pulls back, down close, you sell the open of the next candle. That recipe never changes. Go back a year and look at me doing video recaps of these trades. Bearish cross, price pulls away, price pulls back to physically touch the BBC, down close, sell the open of the next candle. That candle opens at 42.20. Swing lows 42 before you have any real pullback. Okay. Now, you see this red CFMA1? For me, the first signal to get out of this trade is when I have a bullish candle close above the CFMA1 on a short trade. Right there. So you get in based on the recipe, bearish cross, price pulls away, price pulls back to physically touch, down close, sell the open of the next candle, which is 42.20, and this green candle that I highlighted here closes at 41.99. $42.20 to $41.99. That's 20 ticks. And what's telling you to get out of the trade? This bullish close above the CFMA1. Then what happens? Price pulls back to physically touch, down close, sell the open of the next candle. Right there. The open of that candle is 41.97. If I write it down, I won't forget. 41.97. And then it drops, and see when we get this first close back above, right here. So the swing high of this candle is 41.84. 41.84. So from 97 to 84 is 13. So there's a 20 tick trade and a 13 tick trade, not to mention the trades you had coming down off the trigger line. Okay, now that's how we trade it. Now maybe you're not in the mentoring program and you're saying, well, doggone it, how can I trade it? Well, you can trade it with the 4 tick range without the indicators, using the exact same everything that I just explained to you. Okay? But let's do this. Let's go to a 5-minute chart. That's something that most folks are familiar with. Okay? Same trade, same market. Okay. All right, so you're going to get rid of these numbers. Okay, now watch my cursor at the bottom, red cursor, 21.30, 35. Okay, if you're going to trade this thing on a 5-minute chart, where's your stop loss going to be? It's going to be right here. When that triggers, automatically going to put your stop a couple ticks below this most recent swing low. Okay, getting this kind of action right at the trigger line, because important prices, important areas are almost always tested. So this little wiggle, not unexpected. Once it begins this move up, you reduce your stop to right there. Okay. Now, this is 42.99. If we're getting in at 81 to 99, what is that? 18 ticks. That's $180 per contract. Now, maybe you do this, okay? But at what part are you going to really start to tighten it up, okay? How far are you going to let it run? Now, what I just showed you, can that work on a 5-minute chart? I'm trying to increase the size. This thing won't increase in size. Okay. All right. Now, bullish cross, price pulls away, price pulls back, physically touch, up close, up close, by the open of this candle, right? You can ride it right up until you get the first close below. And where's that? 42.91. No, the close. Yeah, the close is 42.91. So from 81 to 91, that's your 10 ticks for the day. But maybe you want to trail your stop behind the BBC. This is the green line. Okay. Markets are fractal in nature. Here's what the trade looks like on a 5-minute chart. You simply keep moving that stop up. Here's your first stop. And then once it takes off, your stop goes to here. Because remember, the market's always building legs. Leg, retrace, leg, retrace, leg, retrace. Now what's it doing? It's building legs in the other direction. Leg, retrace, leg, retrace, leg, retrace, leg, retrace, leg. And so, you're here, and then you're here. Once this swing low is put in, and the market starts to move higher, you move your stop. Okay? But don't get greedy, especially after this huge candle here. Man, got to be locking that in. Okay? Remember, the answer is more contracts, not more points. And the way to get to more contracts is to learn how to make $100 per contract per day. Let your account balance increase by $2,000 before you add a second contract. And if you're not a partner, get together with me and I'll talk to you about how you spread out the balance. But I really encourage you to become a partner because you need to learn how to trade. We have over 1,000 hours of live video, which includes both live trading, live training, and here, let's get rid of this. Okay, now these are the same moves for the same market that we were looking at. Remember the trigger at 42.29 on this first trigger coming down. I mean, where are you gonna start with your stop? What are you looking for out of the trade? Okay. If you're looking to make a killing, if that's your goal each day as well, I just want to make some money. Not good. Well, I want to make a lot of money. Still not good. Set a daily goal and figure out what you're going to do to reach that daily goal on a daily basis. See, with an entry point based upon the trade alert at 42.30, and we got to drop it to 42.29, then 42.19, which is right there. That's one tick shy right there. But if you're aggressive with your risk management, when this thing gets down to 22 from 29, and you can lock in 3, 6, 9. This one doesn't go far enough to do anything, doesn't stop you out. And then you pick up the balance in this. So in 5, 10, 15, 20 minutes, you're done. And you're done again. And you're done again. Does that get down to 42.19 exactly? And this one. And important prices, important areas are almost always tested. So here we come around the 9 o'clock open for Wall Street. There's 10. There's 13. And that baby just keeps dropping. Now 10:30 we had inventory numbers come out, and I don't believe in trading in front of the inventory numbers. I like to wait for the market to settle. Okay. Now if we go back and look, what was our number on the upside? 42.80. Here, let's just drop 42.80. Push it up to 81. Now, this is 1 o'clock in the afternoon. The inventories came out at 10:30. Okay, so that's out of the way. That's not a problem for us. Price sold off pretty good. Came back, offered, a couple. Offered a stop. I see a stop out, and I see. I see it. That's a break even right there, because it went 4 ticks. Stop goes to break even. Okay, that one. It's the low of that candle. It's 42.28. So that doesn't trigger. Oh no, it does, because we're at 42.29, and so this one tags 42.28. So you actually get a stop out on that one. You get a full-blown stop, 8-tick stop. But you got good things up ahead. This one runs from 81 all the way to 96. That's 15. This one here runs from 81 to 85. So that becomes a break-even trade. See, this closes here, opens here, runs here. That gives you your break-even. And now look at this guy. From 42.81, runs all the way up to 43.08. Now we're drawing near the end of the day. And we're back trading above the high alert. So those are some ideas, some things for you to think about. Now, let me just show you one more thing, because I know some of you guys really do have some experience. And so let's go to a 30-minute chart. Okay. Shrink it down a little bit. Now those numbers again, was long about 42.80. So there's 42.81. And one tick above. And the short side of the trade was 42.30. $42.30. Now these are 30-minute candles. So see, the the alerts came out at 20:45. 8:45 is 20:45. This is the 2030 candle, and so it was up above when we put this in, and so that's when it gave us our first 30-minute drop. So now if you're trading off of a 30-minute candle, I want you to think about this. Sometimes we think, well, if we go in with a higher time frame, we got to have more risk. Not always, okay? And the risk can be relative, all right? So if your first trigger's here, your stop's going to be there, okay? But you're going to be in this all the way through here. And then once you get this deep move, I mean, your stop's at some point. Again, you have to determine what it is that you want out of the trade. What kind of trader do you want to be? So drop me an email. I hope you all have a great Thanksgiving. support@cfrn.net. 949-42 Emini. If you call the number over the holiday, you will get the voicemail. But that's okay because it transcribes your voicemail into an email. Michael and I both get it, and one of us will get back to you. All right? Look forward to hearing from you. If not over the holiday, then I'll see you all Monday morning in the live trading room. Take care and happy holidays.